We'll be going over IRS Notice CP51A. This is the notice that you might receive from the Internal Revenue Service in the case that you filed an income tax return and they've recalculated your tax liability. So we'll walk through this. We'll kind of determine, what happened with this particular example tax return, and then we'll talk about some things that you can do if this is a sudden, unexpected surprise for you. So before we go through this notice, we'll start with the upper right-hand corner where you can see the notice number, CP51A, the tax period, which is the tax period ending December 31st, 2017 in this case. The notice date is probably the most important part of this form because it does determine any timelines that you may experience or that the IRS may be expecting you to respond by. So in this case, there's a timeline of paying your tax bill by a certain date, but sometimes there's really a timeline that consists of a number of days after the tax notice. So I'm trying to see if that is actually anywhere in this notice. I don't see it here, but we'll see if we uncover it as we go through the rest of this notice. But in this case, if for something, for example, the IRS says you have 30 days to respond or 60 days to respond, that's from the notice date, not from the time that you receive the notice. So I'll pivot to probably the other pretty important aspect of this notice, which is the taxpayer name and address field. So you'll want to ensure that this is accurate. If you've recently moved, then the IRS allows you to change your address in your tax record in one of several ways. One, by filing your income tax return. So if you've filed your income tax return with your most current address and it's different from the one on file, then the IRS will go into your tax record and simply make that update. If you're in between tax returns and you've started to receive correspondence, then it's in your best interest to make sure that your tax record reflects your most current address because of the fact that your notice date determines when certain action items are due. For example, if you have to pay this tax bill by February 21st, but you've relocated and it takes an extra couple of business days for your mail to catch up to you, then if you receive this on February 18th instead of February 12th, then you're still on the hook to pay that tax bill by the 21st, regardless of when you get the notice. So you can call the IRS and update your address over the phone, or you can file the IRS official change of address form. For individual taxpayers, that form is IRS Form 8822. For business owners, it's IRS Form 8822-B. And we'll put links in the show notes to articles and videos about any of the forms that we mentioned in this video. So let's take a closer look at this notice. So looks like the IRS reviewed the 2017 tax return and calculated the income tax using married filing status and one exemption. So this is not something we would see in 2024 or 2025 because the Tax Cuts and Jobs Act of 2017 eliminated personal exemptions for years 2018 to 2025. However, there may be other reasons that you receive this CP notice, and in tax years after 2025, personal exemptions may come back into play. So it's worth still evaluating this and just kind of walking through the mechanics. So if there's a different reason why the IRS recalculated your income tax, then you can kind of walk through this in a similar fashion. The IRS basically says that you owe $4,751 that is due by February 21st, 2018. So And then here's an itemized list of all the different things that that the IRS says you need to pay. So right off the bat, it says taxes that you owe, payments that you've made, minus credits that you have, and then failure to file penalty, failure to pay penalty, interest charges. So it looks like, it looks like basically these kind of wash out with these except for $89 of difference here. So realistically, you paid $300 on a $5,000 tax bill. A failure to file penalty, objectively speaking, probably would not have occurred if this is a notice date for, this basically is still tax filing season, February 9th, 2018, based on a tax year that ended at the end of 2017. So, this appears to me more of a placeholder, or if you received a notice in, say, like August. But the other reason why I don't think this failure to file penalty would necessarily be here is because it says that you sent them a tax return. So clearly this is just walking through the mechanics of what could appear here. So this, let's do that. So all the interest charges, failure to file penalty, and then giving credit for the payments that you made and any tax credits that were on your record. So the instruction is pay the due amount of $49.11 by February 18th. You can use the electronic federal tax payment system. We'll put a link to the form that you can use to enroll in that if you're interested. That's in the show notes. You can also go to eftps.gov. That's the EFT payment system website. If you wanted to submit a check instead of the payment electronically, you can simply cut out this voucher and then write out a check or money order payable to the U.S. Treasury, United States Treasury. You should write your Social Security number, the tax year, and the form number on that payment. And again, that payment's due by February 21st, so give yourself lead time for the mail service. The other thing I would caution you when submitting a payment with the voucher is to use the address that's on the voucher. In this case, it's the same as the address in the letterhead, but I have seen notices where the letterhead address is completely different, like in a different city, different, not just a different spelling of the zip code or a box office, but an actual different city than the voucher address. So when in doubt, use the voucher address. So there's some additional options that you can go through if you can't pay. Installment agreements, you can do a lot of research on the IRS website. So if for some reason you have a tax bill so the IRS website allows you to set up a lot of different type of installment agreements on the website. If for some reason you're experiencing difficulties or if your tax debt is greater than what's allowed to be done on the website, you can request an installment agreement using IRS Form 9465. And again, we'll put a link in the show notes to those articles and videos as well. So here's an explanation of the tax situation. Obviously, this is a fictional example, but they might have made some changes to your adjusted gross income, earned income credit, and taxable income. So total tax results in $5,000. What I would do is actually compare this to the items in your tax return, and if there's a significant difference, what I've seen usually is a third column that says this is what the taxpayer put on their tax return. And so in this example, and again, it's just an example, it's surprising that they haven't included that. But if I received an official notice, I would expect to see a column for taxpayers' calculations, and then you can actually compare that. And I would call the IRS if there's something significantly different, just so that you can get a better understanding of the tax position. Maybe they made a different interpretation than you did. So either this is a learning moment where you can pick up on what not to do again, or you can actually start to discuss whether or not you need someone else to take a look at your return for a specific reason. There's a contact information cutout page here, so you can use that if you want to. You can also update your tax record online. This page contains a kind of a verbiage that discusses how the IRS imposes penalties, failure to file, failure to pay. Sorry for the blurriness. That's from the IRS page, not from my screen. The failure to file pay, an interesting note, it's generally 5% of the unpaid tax for each month or part of a month that the return is late, for up to 25%. So up to 5 months. But whenever there's also a failure to pay penalty, which usually applies, that's 0.5%, and they'll offset. So basically, instead of the full 5%, it's really 4.5% up until you reach that cap of 25%. And then this 0.5% per month is cumulative up until a separate 25%. So overall, if you don't pay that tax for a long enough period of time, you can incur a penalty of up to 50%. 25% would be this failure to file. 25% could be this failure to pay. And then there's further explanation on what happens if there's a notice of intent to levy. For people with an installment agreement, the penalty is reduced. So another reason to get into an installment agreement is that it lowers your penalties. You can request a removal or a reduction of your penalties. There are a couple of ways that the IRS could do that. So for most taxpayers, the first time you have a penalty, you can request a first-time abatement. And that's exactly what it sounds. So if you've never done this before, then you can qualify for a first-time abatement, and the IRS has a wide degree of discretion on how to grant that abatement. You can also cite reasonable cause, so like a serious illness or injury, a family member, illness or death. If you lost financial records due to a natural disaster like a hurricane, all of those would fall under the IRS definition of reasonable cause, and you can request a mitigation or removal of penalties. And then the third reason would be if you specifically requested written advice from the IRS on a particular issue. If you gave the IRS full and complete information that was accurate, if you actually received written advice from the IRS that you then implemented, if after all of that the IRS turns around and penalizes you for following their advice, then you can request removal of those penalties as well. And in all three of those situations, you would request removal or reduction of penalties on IRS Form 843. That's the claim for a refund and a request for abatement. And we'll put a link to that in the show notes as well. There's some verbiage on how the IRS calculates interest. It's harder to abate interest than it is to abate penalties, but the IRS generally, if you end up having your taxes recalculated or your penalties are reduced or abated, then the IRS will recalculate your interest as if that tax or penalty never applied in the first place. So you will see a reduction of interest if you do get penalties abated. And that's all we have in this notice. I'm going to hit this link here to see if there's any additional information on the IRS website. And you can see that there is a little bit of verbiage. There's a link to the tax withholding estimator tool that you can use to kind of plan your taxes for future purposes, and then other links. There's a series of frequently asked questions. What if you can't pay? Then you can request a payment plan. What do you do if you disagree? You can call or write the IRS. If you are charged money on the interest on the money that you owe, whether or not you receive a late payment penalty. So all of this is pretty well covered in the notice itself. Again, as long as you pay whatever the amount due is, then the IRS won't tack on additional interest by that due date. However, after the due date, the interest keeps recalculating. So that's all we have for this notice. I think we covered everything. We'll put links in the show notes. So if for articles and videos, if you like articles, please subscribe to our newsletter. You'll get an update on new articles as we publish them. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.